Hello and welcome. Let's do part two for the Dow Jones Industrial Average. And I will say in this video, everything you do is within your own risk, own reward. For I am just minutes away from saying, wow, 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 wow. As I was doing work and preparing this video, this seems to be now a very risk reward aggressive time to sell. And I haven't even calculated yet what the downside targets are. I know how to do that though. We'll see, but we'll get to that point. Now in part one, what I did is I did technical analysis on the weekly term time frame from 1915 through around 1951, 52. And the plan is to go until this point. Spoiler, this is where we are. It's been in a big uptrend since 83. Some decent moves along the way down here and there. And up at 24,000 and change. And that's an interesting number. Like, wow, I'll show you in a little bit. But you know what? The last time I used this theory with incorrect data, it was sort of wrong. And I'll explain later in this video. So what we're going to do is we're going to take a look at this on a technical analysis level. I want to go through every week up until now. We'll start in 1951. And I'll explain why I think this is a very aggressive risk-reward sell. And we'll figure out where the 23.6% level is. But for now, let's go to 1951. And this was the entire data that we went through. We got Fibonacci from the 1929 highs and the 1932 lows. Decent size retracement. That's about a 9x move. And when we look at this reference, this is like crypto space. However, we're using weekly data. I'd be using a much shorter term time frame because notice it only took, and I mean that like it's the other way. I mean, it took 2 years to lose 8 times your value. I mean, you should lose 8 times your value. 3 years actually. Yeah, that's slow. I mean, you should lose 8 times your value in less than a year and a half anyway. 2 years max. 70% moves in a week are common, and 10%, 15% down days are obviously 10%, 15% of the time, yeah. But the Dow Jones, those days are not like such. But anyway, as the Dow Jones was moving, and it was in the mode of trying to regain a bullish trend. It had the big down move, it played all these levels, and after a decent amount of time going sideways within this point in here, which was a bullish behavior, it now managed to go super bullish. So now all sell-offs are totally guilty until proven innocent. And when we've already got these higher lows, because it's having a decent leg higher or just having good higher lows, what you would expect is we don't know when this rally is going to end, but we expect a decent higher low. Right now, I would expect this would be the lowest it should get if it's going to be bullish. And as it goes higher, the expected higher low should go higher within form. As we can see, decently higher from this low to this, decently higher from this low down to here. So let's now take a look at this so we can see it better with each candle like such, and continue moving forward. So it's got to get up to that line for its next big test. Everything's in a bullish mode in this situation, and the market settings here, if you're looking at it and you're like, is it a good time to go long? I'm like, you know what? Yeah, because we have the situation of established resistance 276 where it's at now. It barely got above here. It's in the correctionary band. To me, it looks like it's leaving it. Now, if you want to pay more for insurance, maybe try to buy it on a break at around 282, 283. And you can see if that was the case, you would have bought. But if I would have bought here and held, this made a higher low to here. Barely went through the 18 lows. And if you were looking to try to buy in here because you only want to buy if it goes below the 18 lows, and See how it would have worked out in that spot. Because the tendency of the market is bullish, you can afford more often than not in situations like this to buy as it barely goes below the 18 because of the bullish trend that it's at. So that would be a spot right now at 271 where you would buy, maybe buy again on this leg lower. You'd have to buy again if you did this game, because you see at this stage, it is giving itself a more of a sideways market correction in here. Yet it's still in the super bullish mode. But what we would notice on a technical analysis level, that if it will remain at that great status, but it has to hold at this stage what the 259 level would be. And if it was unable to do that, and you were seeing momentum moving towards it, you would be giving it a price target objective to 228, where we'll see what happens next. But obviously for now, you'd be in a still in a bullish state, and we can see here that we're having a nice breakout. So you've got your leg higher. We're still trying to approach previous high, and it's a great leg higher. So if you're just waiting for such, you can see it's been paying off to be patient. But either way, there's nothing wrong with profit taking along the way. And especially if you do it in portions. Oh, I'm going to profit take at 319, 320, and it goes up more. Oh, it's at 360. Take a little bit off the table. Oh, we're at that level, 382, big Fib in our previous high. What do we do now? Well, this is an area where you should find resistance. But it's an interesting one, because whenever you have a market condition where you go to this high, then you have a big move like we did, and a long standing correction and such as we can see here, then what do we notice at this point? This is a spot where the market oftentimes will have some sort of correction. Usually price, if it goes through price, we'd be looking at the 227 and even down towards 200, or where you see those two resistance peaks. It could do time, and time, the lowest it would be is 288, but even around 312, 313, even 340, 350. And it could even be support through time. But if you don't find support where you're supposed to, you can expect to go to a pretty big number. Now in part one, I had a very difficult time in trying to determine Fibonacci upside. It came to around 1200. I'm not going to give you a spoiler. And so now if it would be in a stage, if it breaks out, you're expecting a decent leg higher. And you'd be looking for it to have a good enough leg where any pullbacks would go to where it came from. Because in the later, when it has a decent break above the 380, 390 mark, where's a good place for it to come from? Obviously high to key point. So that would be ranging between 300 and here. So if there's any decent moves, that's where the pullback would be. But you would honestly expect to see it go to this level, maybe pierce below, but not hold and stay below. Anyway, let's move on and see that you have a market condition like this. Nothing changed within the direction of how the market moved. The dynamic of it is now we're playing for upside targets. The Fibonacci numbers are going to have to be increased through time. Now they're not going to be they're going to be going up, but I'm not going to manually do it until we see signs that the buyers are going to lose control of the market. There's a situation where they have a chance to when it goes down to this level, because it barely goes below the 18, but we see it's just back to this point, gets above, and okay, gets a bit below again, here again. No reason yet. Now here we go. If I'm not going to calculate Fibonacci yet, because I want to wait and see how it handles this move. And this is exactly why. Okay. Now you're starting to establish a key level, roughly around around 450 or so. You've had a lot of support within this. You were unable to make a higher high. you made close to a matching low on this one, and you did it again. So you look at the rate of ascent, it's going up, and now it's flattening and starting to go straight. So there's no reason to see any type of, to say, okay, it's going to go in a bear mode until you can have a break below here. It's getting very neutral. Another test of this level. So let's calculate it. Well, I already know what the low is. Anyway, it's 41. Because we're using the lows from the breakout. The breakout lows in here. At 41. The high at this point, let's go 525. So these were the old numbers. I'm going to delete this horizontal ray because this was previous high. So we're going to notice these 4 lines just rise a little bit on each one. And oftentimes I notice that these levels move up to key spots. So this tells me that the rally probably isn't over. Yes, this 23.6 is at a key resistance level, and the 38.2 down most certainly is at a huge level. Yeah. And the 23.6, this big support, this was resistance here. There's one thing missing. I need at least the 23.6 number to reach previous high for me to first state that this is going to go such. And then I would expect this line to move up to somewhere around here. This line to move maybe around this support mark in this key area. And maybe this one would match up with these lows around 94. So that's one thing that I'd be looking at. So in a situation here, I would realize that if the market comes down, I would expect 288 to be the price for any type of market capitulation at this time. And then if you're using any type of shorter term numbers, I'm not going to calculate it. I don't need to. But the Fibonacci that I used, and this is the calculation, I got all these numbers in here. So I wouldn't use the, I think it's the 85 per 80. It's the 90% is one of them. And then it's like the 85.4 or something like that. Those are the next two numbers that I would use. And there's like one around 95%. Now how these are calculated, if you take 61.8% and multiply it by 61.8%, you get 38.2. And if you multiply that by 61.8%, you get 23.6. If you multiply that by 61.8, you get 15.4. And then you get like 9% and so on and so forth. And then I just subtract the number to get the other one. So subtract 23.6 is 76.4. And the calculation is high divided by low to the exponent of this number. So 0.382 and so on. And multiply the low. For the up target, that's to the exponent of 1.618. And the down target is the exponent of negative 0.618. All right, then. So as I would look at this, my lean to the market was I would think any type of selling would probably be an amazing buy. It would be the only low that would hit, but I would expect the chance of further gain to come into play because of such. So another continuation. So that's what I would mean, just a small test. I would have a hard time believing those ones. And sure enough, the market's going higher. So that's one way of looking at it for a leg higher. It did not reach the 76.4 that is previous high. And now we're just going to do the same thing again. It's barely established the level of support. It could still establish more. There's a lot of this gap fill. Even if it were to pull back to say like 590 or so, I wouldn't be all that concerned too much. In fact, it would be the start of another decent buy opportunity. And that's the established level of support area now. We got a range of about 600 to about 568. And there we go. I mean, there we go. Now let's just see where the high is now. Definitely time to adjust the fib. 738 will go. So now I have the numbers adjusted. I'm always going to be using this low of 41. And we have a 38.2%. And what you would have, I might have to later on in the video do such, but 373 is all I'm going to be thinking about right now. And I'm going to notice that that would be the price target. But I would expect that this is going to go up anyway, because I know that this manages to get past the 1K point. And sure enough, there we have it. We have 1,000. Now, we are about to enter what has been called that of the silent crash. It's going to be one heck of a sideways range. Meanwhile, inflation was going up. Now the up target is set in that of 1,000 and well over 1,000. Like it was, we said, I said rather in the last video, that it was 1,000 in which, like 1,200, somewhere around there, of a Fibonacci upside. I first came up with 1,500, but because it was an aggressive correction, I thought it was too big of a number to choose. But as you can see, this is where you get a lot of violent spikes. Now, in a situation here, as far as getting out of the market here, it becomes very scary in the bull market to even get out here. Only because there's a decent chance that you come down here and that's where support is. Now in that case, it came down a little bit more. And when markets become choppy and you're trying to find direction and wait for setups for markets to go up and down, then all you're usually going to get is that of a decent sideways move, or decent gain or loss, that is. So if you see, oh, it's breaking out above 920 and then it goes up like 10% or 7%, just bet, and it doesn't do much more. And it makes it very difficult to profit as a trader. The strategy that I use, it's going to thrive really, really well. So that's going to be interesting when I do this test later on, how this is going to work and towards this decade. And therefore, let me just, I don't want to remove the drawings because I got the Fibonacci lines. But you know what? I'm not going to need the Fibonacci lines as is. So let me just remove the drawings and calculate where it stands right now for at least the 23.6 correction, and at about 1,000. $471. I don't even think it comes anywhere close to that. So all the market would ever do is just hang in there going sideways, basically give back like that 15% correction. This is probably where the 15% area would be, is where the support is going to come into form. But all of this just turns into be sideways action. Well, there's the 575, but now in a situation with what we got here, now this is what I'm going to do. I'm going to switch the time frame over. We're going to go to a point when I was about just 3 years old or something around there. Early 1979, I would be, I would be a little over 3 years old. So let me go to this point on the monthly chart. And within such, this is what we've had. We've had an amazing, amazing move. The rally has been from 40 to 1,000. So when you look at the grand scheme of things, very, very solid. We had this high. We had this very large correction. Of course, it was moving up from pre-1915, but only by a bit. This was still a very massive correction on the grand scheme of things. It managed to get above this high on its first attempt with like no resistance at all, and a big move up to, of course, this 1,000 target. And that's a decent leg higher. I mean, nothing too small, nothing too big. Like the three little bears, it's the porridge has got to be just right. And this is the same thing. I feel exact same way here in determining. This move up to here is just too small. And in part 3 of this video, we're going to see what happens when you don't get too small and you don't get the just right. You get the third one, and that's going to happen in part 3 of this video. But what would happen now is you've already established this level, and the Fibonacci upside target was like 11-ish or so, or regardless of the fact it was in the ballpark area. So it's definitely at least a pierce below. So it still kind of counts as okay. Either we got to look at the 261, but what we're going to do is we're going to take a look at the 61.8% here from this high to this low, which is 1,000, and the 41, which we already have. That number is 139. So now what I want to do is take a look at that level. And that gets me to 33.85. What I mean about the just as far as the leg higher or lower being just right, I'm going to show it in the next part, but this market went up to like over 10,000 in the year 2000. That's 3 times higher, which means it had a more impressive of a move. And that was just beyond phenomenal. So then I decided to calculate Fibonacci a little bit further. And when a level of resistance is not made, oftentimes the 261 actually works. Now the next one after that is out of hand. It's an interesting thing because using the normal upside target that I have, it's done wonders. It's usually hits pretty much at that point. In cryptos, it usually pierces above. In this case, it pierced below, or depending on what the number was, but either way, it was in the area. But in the times when those numbers just accelerate further, I've seen the 2618 work very well too. And then the one after that is so out of hand. It's not really, I mean, actually Bitcoin might be running on the third one. It's a really phenomenal number when you look at the mathematics and how big those increase. So I did a calculation, and the 2618 is what I'd be doing. So in the Google, I did 1,000 divided by 139, high divided by low, to the root of 2.618, multiply the low, and that number comes into 24,357. Which means, in the grand scheme of things, let's put a line at 3,000. Now, first of all, let's put the line here because that was the big resistance. And then we'll pretty much go about right around here because that's technically, I think, the more accurate higher level would have been. And then about here at the 3,000. And then here at 24. If this is a level of resistance, then there'd be a pullback. When you have monstrous moves, you never rely on 23.6 at this stage. That is asking too much. And even asking for the next one below that, which is around the 15.4, I think. It might be 14. I think it's 15.4. That might be asking too much as well. So I'm going to quickly, I think I might know how to calculate it. I am thinking that I'm going to go to the 10. So my guess, if the market falls for where the Dow Jones would go to, that can't be right. No, not 909 is what I need. Duh. 9% down. Yeah. 90.9. 13,712. And that's pretty much where the 2007 highs would come at. So that would be, to me, where I would see capitulation lows at 13,700 area. Now in cryptos, I would pretty much say pierce below. But in this, if I was playing the game, that would mean sell aggressive now, buy minuscule around in between the number, and that would be somewhere around 18 to 19, and then buy at around 14, a pierce above, just to be safe, knowing it could easily go to 13.1 in that area. But that's where I would expect, on a technical analysis level, if I ever see a spot where it's both bullish and bearish to go down, and I do, then I would say that a move to here would make a whole lot of sense. And if it's going to go up from here, well, normal, yeah. And if it would go down, it wouldn't be a surprise if it either crashes to a big level or it does some sort of rally and does something like that. However, this is the if or kind of deal. If something doesn't happen, what the other thing is going to be. If we don't find much resistance where we stand now on the super long term, I'm looking at the monthly term time frame. I'm just going to remove that line right now. If we don't find resistance, and this doesn't count that it's just going through time. I mean, this is okay. It's had very little resistance long term at this point. Very small. But if we don't do much here, and we don't get really a price correction or even that much of a time correction, and this thing goes higher, I'm expecting a fast move one way or another to the next level. Now, if you really want to get technical, 4.23 is the next Fibonacci number. So then, let's see if we can calculate that. And I'll go back to this calculation. And the next number after the 2.61 translates to the 4.23. I think somewhere 4.85 or 4.23. I'll do 4.23 just to be safe. See, it might be 85 actually. I think it's 485 actually. That we would be talking about 2 million, about 2 million or so. And if I 4.23, if I go that, we'd be talking 500,000. So basically between 500,000 and 2 million would be the next upside target on the super long-term time frame. Hyperinflation is what that would mean. That makes sense, actually. I mean, it would make sense. So which of the two will happen? I don't know. I really don't know. I would have to think, if anything, we might, well, put it this way. If it's going to be a bear market and stocks are over, it's got to go below like 1,000 at this stage. So any type of move that only goes to like this level here, like 13,000, even 9 and 8,000, oh, for that matter, even 7,000 and 6,000, that's all like a small washout, however you want to look at it. So it wouldn't surprise me if you get the failed move first, which would be a move probably to around key Fibonacci that I've calculated. And then we get a move to somewhere between 500,000 and 2 million. We'll see how this translates. It's not a wild prediction, I don't think. It's just a calculated guess, I would think. In part 3, we're going to look more again, technical analysis, see how it breaks. Well, we're going to, obviously, everyone pretty much knows what happens. But we're going to go through the break of this range. Thank you for tuning in and have yourself a great day. Bye-bye.